Could you share with our audience a little bit about you, your trading background, how long you've been trading, and what got you started in the first place?
Yeah, so I'm actually coming up on my 10-year anniversary of trading. It's crazy to think that's almost been a decade.
Yeah.
So probably in about 4 to 5 months, I'm gonna hit the 10-year mark. So we'll throw a big party to celebrate.
Okay.
But aside from that, I started trading when I was 19 years old. I was a barista making Starbucks at coffee. And I think back then I was making about $150 a week before taxes. And after taxes, it was like $120.
Yeah.
I had a girlfriend at the time, and I would probably use, and gas was expensive back then too. So I'd probably take around $60, put it into my gas tank, maybe like $40, take her out to like the movies, like out to dinner like once a week. And I probably had like $20 left at the end of the week. So I was doing this for a pretty solid amount of time, but it was the thing that really got me into trading was my girlfriend broke up with me for like a rich guy.
Oh no.
And my thought process was I want to get back at her by getting so rich that like she regrets it.
Right.
And in America, there's 2 ways to get rich: real estate and the stock market.
Yes.
Real estate has such a big barrier to entry. You need a lot of money to get into real estate. Whereas stock market these days, you could open up an account with like $500.
Yeah.
So I was like, perfect. You know, I have $500. I could save it up. I could do whatever. And now that I don't have to take her out to the movies or spend money on gas, I have, you know, I'll make $500 a month, right?
Yeah.
So I'll work for a month. I'll take that money and I'll open up an account.
Do you have any messages or advice you want to give to our viewers watching this?
I have a lot of advice because I made every single mistake that you could possibly imagine.
Yeah.
So number one is make sure to set a max loss with your broker auto liquidation. And the way that you set that is, let's say you're making $100 a day trading.
Yeah.
Your max loss auto liquidation at the broker level should be no more than 2 days worth of trading. So it should be, if you make $100 a day, your max loss should be 200. That way, you never lose more than 2 days worth of work.
Yeah.
Whereas other people, they set their max loss at like 1,000. All of a sudden, they lost 2 weeks worth of work. It doesn't make sense. So number one is set your max loss auto liquidation at 2 days of your normal day. Number two is set your max size. So set a max position size on your account. The best way to do it is like, I mean, everyone has different equations, but like usually like a fifth of your equity. So like whatever your equity is divided by 5, that should be your max size, max size, max size. Number three is use hard stops, hard market stops. When I first started trading, I didn't know what stops were. No one taught me. I had to figure it out on myself. I would manually do it. And every single time I'd be a deer in headlights. I'd freeze. I'd be like, I'm going to stop out at $5. All right.
You don't really follow it.
Now it's like 510. Shit. And then it's like 520. Okay. Like if it goes back down to 510 and then all of a sudden it halts up to 6 and I'm dead. Right? So use hard market stops. If you use a limit stop, you're not going to get executed. Aside from that is there's like a lot of communities and like a lot of chat rooms out there, and a lot of them are like frauds and like con artists. So like make sure you find a community that not only the head trader is profitable, but the students are also profitable too. Because the head trader can make money all day long, but can he teach other people how to make money? That's a question. Also make sure that like, I mean, I have my broker statements on my website, like the IRS broker statements, so that I want to prove to people that like it's legit. So make sure that people, like you see the broker statements from people as well. And then on top of that is like, once you also have money trading, make sure you diversify. Make sure you put it into other places, because like I said, with the example on top, I had $1 million in my account and I was prone to losing it. Had I just stuck to my rule of wiring out $15,000, I would have built my bankroll a little bit more this year. That would have been like, all right, like whatever. Like I'm not going to risk that much money on that stock. So for me, the way that I diversify is like I buy watches, cars. I'm in a couple like venture capital funds. I do real estate, I treasury bills. I buy like long-term stocks like Apple, Tesla, stuff like that. But I diversify my money outside of the market so that, God forbid, if I'm having a bad month trading, the treasury bills will make up for it. The investment in stocks will make up for it. The venture capital will make up for it. Like I have different avenues, so that a lot of people, I think what they do is like once they make money trading, they just keep their trading accounts big and big and big, but like it's just too much risk. It's too much risk. So I think once you make money trading, give yourself a paycheck and diversify. And the rule that I did is $30,000 account, $35,000 account. If it goes to 50,000, wire out 15,000. Take that 15,000, 10,000 of it, invest it however you want. 5,000, keep it in the bank. So whatever you want to invest. I don't know if you want to buy, like, it could be anything. I mean, even handbags are going up in value.
Birkin bags.
Birkins are going up in value big time. You have watches, you have bags, you have venture, you have real estate, you have stocks, you have treasuries, you have crypto, you have everything that you could put your money in to kind of get you there. Just like put it outside the market.
Yeah.
Put it in different places so that on a rainy day, you'll be able to make sure that you have a nest egg prepared for yourself, just in case, God forbid, something happens. Because if you have all of your eggs in your trading basket, too much risk.
Yeah, I've come to realize that as a trader, we are the number one threat to our trading account.
Imagine.
Because we're humans after all, we're dumb.
So imagine you had all of your net worth in your trading account and one HKD, one top, one whatever came around. All that 10 years of work you put is gone in one day.
Yeah.
So I have my accounts to the point where, like, again, these days I'm keeping my account at like 45, 50,000 because you really don't need much more to trade small caps. You really don't need much more. And I'm now going back to the basics of just wiring out and wiring out and wiring, because that's what got me to be profitable.
Yeah.
Pulling out that money and having that security in my bank account allowed me to not feel like I had to trade every day to make money, you know?
I'm sure our audience are really curious about what your daily routine like as a trader. Can you share what the steps are with them?
Sure. I'll share beginning to end. So first things first is when I was starting my trading, I would wake up at 4 a.m. I wake up at 4 a.m. every single day so that I know what stocks are moving, what news is moving, and it gives me enough time to like read the fundamentals and read the chart. Now, as I've kind of matured on my trading, I wake up around like 6 a.m. Wake up at 6 a.m. and the first thing I do, no matter what, every single day is I have to check my phone. I check my phone. The first thing I do to see like if there's any stocks on my watch list from the previous day that are moving. After I check my phone, I have to drink espresso. I have to. I'm like a zombie in the morning. I cannot function without coffee in the morning. So I have my espresso. I get right up to my office. So as soon as I get to my office, open up my trading platform, and the first thing I do is I look at the top percentage gainers of the day. So I look at which stocks are gapping up the most on the day. After I look at the stocks that are gapping up the most, what I do is I read the news on each stock. Sometimes a stock has news, sometimes a stock doesn't have news. If a stock doesn't have news, it's a pretty big edge because most of the time it doesn't have a catalyst to keep it up. So if a stock does have news, I'll look at the news and I'll read it and see what it sounds like. Oftentimes, a lot of people don't realize that companies PR the same thing. So I try to cross-reference to see if this company has ever PR'd the same thing.
Recycle the headlines. Okay.
And based on that, that's a different level of an edge, right? Okay. So first thing is we look at what stocks gapped up, then we look at the news. Then what I do is I look at the fundamentals of the stock. So these days, there's a bunch of different tools out there to like use to help with fundamentals. I use dilution tracker because they're pretty simple. Look at, you know, if they have any outstanding warrants, if they have like an ATM, if they have a shelf. So I try to get as much information on a stock as I can before I even look at the chart. So after I get that information from the fundamentals and I say, all right, this stock is gapping up, this stock has a news catalyst, this stock has, you know, something in the fundamentals or the filings that kind of looks a little bit sketchy, then I look at the chart. And like we mentioned earlier, is the chart one of those daily charts where it wicks up and wicks down? Or is it one of those charts that's like, you know, it looks like a breakout is about to happen? Is it like gapping? Like, how is it gapping up? Is it gapping up into previous resistance? Is it gapping up into blue skies? Or is it one of those wick up and wick down? So depending on that, that's going to be something that I try to narrow down as well. If it's one of those stocks that's gapping up into all-time highs, I don't want to short it. I don't want to short it because there's no previous resistance. But if it's a stock that wicks up and wicks down on day one, good. If it's a stock that's coming into previous resistance, good. Then after that, I pretty much plot out my entries and exits based on support and resistance. I keep it really simple. So these days, a lot of stocks are moving pre-market. And by the time you wake up pre-market, the chart is already kind of formed a little bit. So I like to use those pre-market levels as my potential resistance and support. So I'll just draw my resistance, I'll draw my support to be able to visualize it on the chart. Now, these days, there's different pumpers, different discords, different this, different that are moving stocks as well. So I have friends and other people in like all these other discords that let me know if people are like pumping different stocks. So pretty much find what stocks are gapping up the most. Read the news, read the filings, look at the daily chart, draw my support and resistance. What I've realized in the world of shorting is every single day, there's usually a hot stock moving. There's a stock with tremendous volume. There's a stock that has all the attention. There's a stock that all the traders in the chat rooms and all the people on Twitter are talking about. That stock, I call the hot chick of the day. And I call it the hot chick of the day because it's okay. I call it the hot chick of the day because if you go to a bar and the hot girl is there, all the guys are going to give her attention. right?
Oh,
All the
poor
girls
guys.
are going to give her
Okay.
attention, and she's not going to say yes to any of those guys. She's
Yeah.
going to dodge and dive and duck and thing, but she has a friend.
She's just getting the free drinks.
She's getting the free
Yeah,
drinks, she's
that's
getting all
it,
the attention. But she has her friend that like may not be like as good looking,
Oh my
but
God.
like she like if a guy talks to her, she's gonna talk and engage and have fun and whatever.
Yeah, yeah.
So instead of finding the hot stock of the day, the hot chick of the day to trade that everyone's gonna lose money on, I look for her friend, right? I look for the side stock, the stock that
Okay.
may not have as much volume, that already came down pre-market, right? The
Yeah.
chart is already formed pre-market, and I'm basically waiting for that stock to have a bounce into pre-market resistance rather than to short, rather than looking for that hot stock that keeps making higher lows and higher lows and higher lows and higher lows and ends up parabolicking, right?
Yeah.
So a lot of short sellers, they have this fallacy that the higher the percentage gap is on the stock, the more I want to short it. Whereas sometimes it could just keep going and going and going because it has
Yeah.
all the attention.
Yeah.
So for me, I focus on the stock that already has made a topping action pre-market. It's already topped out pre-market, and I want to short that bounce into previous resistance. That's my bread and butter go-to setup every single day. The problem is that most short sellers, they go for that hot stock that kind of goes to resistance and then consolidates and shoots up.
Yeah.
It shoots up because it has all the volume, all the attention, all the algos, all the everything. So as a short seller, I do not want to short the hot stock of the day.
Yeah.
I want to focus on the side stock that not as much people are watching, that doesn't have as much attention, because those stocks to me have the most edge and the most capacity because there's less competition. Whereas the hot stock of the day, it's short crowded.
Yeah.
There's way too much competition. So that's
Yeah.
what's been helping me these days.
You can continue to learn from the Full Trader podcast over here. And if you're interested in joining a trading community with real traders and live mentorship, then check out the link in description below the video.